Hi, I'm Ant Joblin and welcome to IP Go, the show where we take a look at the IPO world, past, present and future. Today we're looking at a firm that IPO'd in November 2019 and is up an impressive 269% already. RAPT Therapeutics is a San Francisco-based biopharma company founded in 2015 that operates as a subsidiary of Bristol Myers Squibb Company. The firm is focused on discovering, developing and commercializing small molecule oral therapies for patients with unmet needs in oncology and inflammatory diseases. RAPT has two main drugs in the pipeline, one for the treatment of cancerous tumours and the other an antagonist for allergic inflammatory disease, and the company is pursuing further oncological research. RAPT has a market cap just shy of $1 billion, which is particularly impressive when you think that the firm had a market cap of $255 million at IPO and only raised $75 million. The IPO offered 3 million of common stock priced at $12 per share, and BMO Capital Markets, Wells Fargo Securities and UBS Investment Bank acted as joint book running managers for the offering. Since listing, the stock has been listed as part of the Russell 2000 and is held in 10 ETFs. Investor excitement with RAPT is mainly linked to the progress the firm is making in its drug development pipeline. FLX475 is a drug that binds to receptors in the body known as CCR4. The antagonist mounts an immune response against a broad range of tumours by preventing the introduction of certain molecules that accelerate the growth of disease cells into the cancer. It's at stage 2 in clinical trials and includes collaborations with Merck and South Korean pharma firm Hamni, and is expected to reach its next project milestone in Q2 this year. The other product making waves is RPT193, a CCR4 inhibitor that dials down the immune response for allergic inflammatory disorders such as eczema and asthma. This project is at stage 1 and is forecasted to meet its milestone in Q3 this year. Elsewhere, the firm has two other projects in the discovery stage. Now, it's almost in vogue for investors to load up in exciting pre-revenue firms. And even though RAPT has produced excellent returns so far, investors will have an eye on RAPT's cash burn. A company's cash runway is calculated by dividing its cash hoard by its cash burn. So when RAPT last reported its balance sheet in September 2019, the firm had zero debt and cash worth $48 million. The firm's cash burn was $42 million over the trailing 12 months. That means it had a cash runway of around 14 months as of September 2019. Investors will be keeping a close eye on the pipeline developments because it's likely that in the future RAPT will return to the market in order to raise more funds. If it looks like products have delayed progress through the pipeline, investors may consider taking some money off the table and banking their huge gains ahead of a potentially tricky fundraise. The next earnings are expected in mid-March, so be sure to put that in the diary. If things keep going RAPT's way, this could be an exciting stock for the future. As always, make sure you do your own due diligence before making any investment decisions. See you next week.